Hello viewers, in this video I'll be going over natural gas, ETF ticker symbol UNG. Today we are up 3.2% on the 1 hour chart. We reached overbought level on the 1 hour RSI, and on the 4 hour chart we have not reached overbought RSI yet. We made a nice reversal as we were negative MACD last week, and then we quickly reversed that into converging, and then now we are positive MACD. So this gives hope that this uptrend is in, or this reversal is in shaping. And as of now, we need today's trend or today's candlestick to close above the 50-day moving average. Ideally, we want 2 or 3 days of candlesticks above this yellow line or the 50-day moving average. So at the moment, I do believe we have a chance of closing above it, and a resistance that I see is past resistance that dated back to, I would say, roughly around the 200 moving average, or I should say the 100 moving average, which is at $20.65. That coincides with past resistance that dated back to July or mid-July. So I'll mark that as our next resistance as we close or near the 50-day moving average. And as for support, I do see possible support still remaining at this level, this price level of $18.60. Reason why, we have support back in June 20th, and we found a good price concentration late July and early August as well. So if we were to move on higher, that price movement is roughly around 7%, and if we were to move down lower and hit support, that price movement is around 3.6% lower. So let's head to the forecast model. On here, I'll go day by day where natural gas will head to in the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, and 6 days out, 7 days out. So which one of these forecasts we should focus on? Ideally, the model that is closely related to the current trend. We have the current trend right down or right here, and this trend, I believe, is the best match to the current trend. Let me prove it why. So what we have in the beginning of the trend, we started off on the bottom Bollinger Band right there, and then we proceeded to move on higher to touch the upper Bollinger Band right there. Next, we encounter a downtrend, and I would say let's just mark as touch the bottom Bollinger Band right here. And then after that, we attempted to break above the middle Bollinger Band but failed. So we have a blue circle, and then we proceeded to move down lower, and then we quickly reverse as well. So we have this point, another touch on the bottom Bollinger Band, and next we remain above the middle Bollinger Band right there towards the end. So we have those points, and we start to see similar patterns shaping. In the beginning, we were touching the bottom Bollinger Band. Let's mark all the bottom Bollinger Bands first. So we have one instance there, and then we proceeded to head down lower than before. And then let's mark the instance where it touched the upper Bollinger Band. We have one over there and one or a close attempt to touch the middle Bollinger Band, but in this case it was not near it, but we do see a attempt or a peak at it. And then next, finally, we see the price remain above the middle Bollinger Band right there as well. So we have about 1, 2, 3, 4, 5, 6 points, and we also have 1, 2, 3, 4, 5, 6 points. So there is reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. And again, the trend that we just examined was June 16, 2011 2011 to September 12, 2011, and it looks like natural gas was down roughly around, I would say 5.2%. So there is still downward pressure on natural gas as we encounter the winter season soon, or I should say the fall. And thanks for watching. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.